This is Optimal Finance Daily, episode 1796. Accidental Hard Money Lending by Joel of 5amjoel.com. And I'm your host and personal finance enthusiast, Diana Merriam. Now let's get right to today's post and start optimizing your life. Accidental Hard Money Lending by Joel of 5amjoel.com. Steve: Hey Joel, can I borrow $50,000? Joel: That's a lot of money. What are you going to do with it? Steve: Well, I have an opportunity to buy a rundown house. My plan is to fix it up, put a renter inside, and then sell it to another investor as a turnkey rental property. It'll cost me about $50,000 all in, and I'll be able to sell it for $75,000 by the time I'm done. Joel: Why don't you just borrow the money from a bank? Steve: I could, but there are a couple of problems with bank loans. First, they're trying to sell me a 30-year mortgage. I don't need a loan for 30 years. My whole project will be wrapped up in 3 to 6 months. Next, the bank takes about 45 days to close on a loan, which is way too long. If I don't buy this house in the next 7 days, I'll lose it to another flipper. And lastly, the paperwork, red tape, and underwriting process is so painful, not to mention costly. I'd rather pay those fees to a friend like you and save all the headaches. Joel: I don't know, man. It sounds pretty risky. How sure are you that this project will work out? Steve: Very sure. This house is a great deal, and I know what I'm doing. I've completed 6 similar projects in the same neighborhood this year, and they've all been successful. I'll email you my past case studies and also some phone numbers of people I've borrowed money from before. If you call these references, you'll hear that I've never failed to pay back an investor. I'm good at what I do. Joel: Wow, I had no idea. Are you putting in any of your own money too? Steve: Yes, a little. I've already paid the $4,000 deposit on the house and about $800 for some inspections. You would be putting in the bulk of the money for this project, but I do have some skin in the game. Joel: Okay, so if I did loan you $50,000, how much money will I make back in return? Steve: Now we're talking. I'll pay you a 15% annualized return for however long the project takes. If the project takes 6 months, your return will be $3,750. The absolute maximum this will take is 1 year, in which case your profit will be $7,500. Joel: Dang, that's pretty good. More than the average returns I'm getting with my index funds. And I like the fact that this is a rather liquid investment. I'll have all my cash back in under a year. Steve: Exactly. It's a shorter term investment that gives some diversification to your overall portfolio. Joel: Okay, let's take a step back and talk more about the project risks. I have some questions. Steve: Sure. What do you want to know? Joel: What is the absolute biggest risk in this investment? Steve: The single biggest risk is me and my team not executing against our business plan. This is where 90% of house flippers and new investors go wrong. You see, any person can buy a cheap house and have good ideas to fix it up. But if they don't stay focused, follow through, and execute at a fast pace, then the project will fail. I take great pride in the well-oiled rehab business I've built. My partners and I have a combined 80 flips under our belt with a perfect track record. We only take on projects that are within our wheelhouse and ruthlessly execute our business plans. I'm confident we can smash this project and all make some money. Joel: Great answer, but I thought that the biggest risk would be the economy crashing, like what happened in 2008. Steve: A crumbling economy is certainly a risk, but the collapse of the housing market wouldn't be an overnight event. There are telltale signs for many months leading up to a downturn. Since my team are monitoring and tracking the area religiously, if there are any signs of a slowdown, we can wrap up our projects and exit the area before we get stuck holding real estate we don't want. We've done this before in other areas. Joel: Okay, well, what if the house burns down? Or what if someone hurts themselves or a contractor sues us or something? Steve: Don't be silly. We have insurance in place for all that stuff. Protecting the investment and your money is my number one concern. Me and my team don't cut any corners. Joel: Wow, this is starting to sound much safer than I first thought. You really do know what you're doing. Steve, yep, I do. I wouldn't ask for your money if I didn't have a thorough plan. Joel, so if I was to invest, how do I send you the money? Do we sign some contracts or something? Steve, the only contract you and I sign is a basic promissory note. Here's the one I've used with many other investors. It states all the payment terms, collateral, dates, and clauses for both of our protection. Feel free to have it reviewed by a lawyer. It's pretty standard stuff. Joel, thanks. May I also take a look at the house inspection results? Do you have area comps to prove that the house is worth what you're paying for it, etc.? Steve, of course. My books are always open and you can have a copy of any document you want. Here are the quotes I got from 3 different rehab contractors. And if you look at this financial projection sheet, you'll find it's quite conservative. Joel, thanks. I don't mean to be a micromanager. I just always like to do my own due diligence as an investor. Steve, no worries at all. I like working with experienced investors, and I'm glad you take this seriously. If you notice any errors in my calculations or have questions about my business plan, please let me know. It's always helpful to have another pair of eyes on the deal. Joel, sweet. Let me review everything and I'll get an answer to you before the end of the day. Steve, cheers. Look forward to doing more business with you. What is hard money lending? The previously mentioned was a real conversation I had with a buddy last year. I never really knew what hard money lending was until this opportunity fell into my lap. A hard money loan is just a simple private agreement between 2 people, a loan from one to the other backed by real estate. It's not as complex as most people think. That being said, easy in theory investments should not be mistaken as easy profit investments. There's a high amount of risk involved with lending money, especially for inexperienced investors. So what's next for me? Although this investment worked out well for me, it ended up taking 9 months. I earned a $5,625 profit. I won't be doing any hard money lending again. Here are a few realizations and things I learned this past year. Number 1, in the exact 9-month time frame I was in this investment from December 2018 through September 2019, the S&P 500 index returned an annualized 22%. I only earned 15% and in a much riskier way. Number 2, trustworthy flipping partners and well-vetted deals are hard to find. It could be many months before I find another good deal. Sitting on $50,000 in cash in the hopes that I stumble across another hard money lending deal isn't smart. And number 3, being completely honest, I was kind of in my pants in months 6 to 9 of this deal. Although Steve said it could take up to a year, my expectations were higher. That's my own fault. I don't really enjoy investments that make me worry or I get nervous about. All in all, I'm going to stick to syndications and buy and hold fourplexes as my primary strategies going forward. You just listened to the post titled Accidental Hard Money Lending by Joel of 5amjoel.com. Let's face it, the work world looks different than it ever has. Whether you're in person, remote, or somewhere in between, taking care of your team couldn't be more important. That's where Gusto comes in. Gusto's modern HR platform makes it easy to hire, pay, manage, and support your employees, all in one system of record. That means no more jumping between applications and no more jumping through hoops. Your payroll, benefits, hiring, and onboarding, team management tools, and so much more are in one convenient place. On top of that, Gusto provides actionable insights to inform decisions around workforce costing, competitive compensation, and employee engagement. So all those tough decisions you make each day just got a whole lot easier. Our team here has been using Gusto for years and have no plans to change. The best part? Listeners of OFD get 3 months of Gusto for free at gusto.com/OFD. That's right. If you're ready to experience a new bar for HR, get 3 months free at gusto.com/OFD. That's gusto.com/OFD. I found this article super interesting. Frankly, I'm not too familiar with hard money lending, but I enjoyed the back and forth conversation to get a better sense how someone might vet something like this. And despite having a pretty good experience with hard money lending, I really appreciated Joel's explanation as to why he wouldn't do this again. Even if Joel's return ended up being higher than what he could have gotten from investing in a total market index fund, I suspect he would still have decided that the larger return wasn't worth the stress. There are so many ways that we can invest our money, but I think we need to pick the ways that best align with our unique skills, preferences, and circumstances. This reminds me of a breakout session I participated in at a Camp Mustache event a few years ago. 4 of the attendees, including me, opened up our books, and we showed the group our finances in the form of case studies. We outlined our income, expenses, investment strategies, and overall plan to reach financial independence. And then the audience was welcome to poke holes in our plan or offer suggestions for improvement. 2 of the other case studies had real estate investing as the crux of their strategy. And despite the fact that their yearly salaries were half of what mine was at the time, they were still projected to reach financial independence faster than me due to their aggressive investment in real estate. It made me reflect on my own investment strategy and question if I should be investing in real estate like they were. So I grilled them on how they were doing it, how much time they were putting into it, what stressors they were experiencing that they didn't expect, how they were navigating the risks, etc., etc. And I walked away from those conversations perfectly content with my decision not to invest in real estate. Reaching 5 faster isn't a good enough reason for me to add the additional stress of an investment style that doesn't align with my unique skills, preferences, and circumstances. Remember, personal finance is personal, and reaching financial freedom is not a race. That should do it for another edition of Optimal Finance Daily. I'll be back tomorrow as usual, so I'll see you there on the Wednesday show where your optimal life awaits.